Hello and welcome to Crypto Weeklies. In this video, we are going to discuss Near protocol and its token Near, conduct machine learning based price forecast, regression analysis, and much more analytics based insights. None of the content is financial advice. Let's start with the machine learning based price model. Over the last key performance period, Near has been one of the rallying cryptos. Available on again. This is cryptoweeklies.com and under the main page again over here. If you go to identify which cryptos are doing well on this heat map based parameter, you'll find that Near has been performing the third best for the last 7 days, also doing decently across several time periods, such as over the last 24 hours, up by about 1.2%. Over the last 7 days, definitely the third top rallying crypto behind Uniswap and Tron. Again, we covered Uniswap yesterday on the channel. Over the last 30 days or so, most of the cryptos are down. Again, Near is somewhere over here, down by about 16%. And over the last 90 days, Near has bled a lot by about 49%. Again, we have made several videos related to Near, latest 3 months ago. Again, back then price was slightly higher. Again, and across the space of bear market, a lot of Near related videos. So if you want updates to Near and Near based forecast, you can check out either cryptoweeklies.com, the link on the bottom of your screen. All of the content available for free on that website. um, Uses machine learning, regression analysis, and risk reward based approach to identify what the token could do theoretically. Right now the price coming at a key point at around $2.70. Again, in terms of Fibonacci level, the next target is at around $5.95. But before that, there are risk level the two levels in terms of moving average at around $4.13 and $4.74, respectively, the 21-week exponential moving average and the 20-week simple moving average. So the machine learning model says that if there is a recovery in the market, the one standard deviation non-euphoria recovery or bull case for Near could be between $3.31 over the next 6 months to about $8.80, and that would correspond to a weekly average high compared to March and May of 2024, as well as the December 2024 rally. What you can see that over here, there have been, even those the three tops on the weekly average scale look essentially at the same level, topping at the same level. Per the candles, there has been a lower high structure. So if there is a slightly lower high in the next rally, that could be resolved at some point between $7 and $7.75. The machine learning model also says that all things equal, the base case scenario for Near is price action to grow at a slight pace between again, the magnitude on this pink line does not matter as much as the directionality. It says that Near has a higher chance of going up with time than down with time. Although if there is a bear market in the next 6 months, Near per this model could visit its October 2023 low, with a bottom somewhere between $1.10 and $2.51. So the purpose of this machine learning model is to not say if the price has to go up or down or go sideways. Those are essentially the three things price can do. But if they were to go up based on cyclical nature of the market or seasonality or any token based positive news or adoption or releases, what could be a theoretical ceiling that is captured in this yellow line, what is the theoretical floor with this green line, or the bear case. If there is a euphoria in the market, the two standard deviation bear case or 95 percentile confidence ceiling for Near is, per the machine learning model, with the data of Near's price action since the token was released in essentially 2022, October 2022, sorry October 2020. In that environment, the price action could rise between $3.80 and about $23, and then that $23 would be a new high compared to the January 2022 high at around $18. Again, in terms of the weekly that was the weekly average for from weekly average perspective, but the previous all time high from the candles perspective was slightly early on, around December 2021 at a candle wick at around $22.34. So a weekly average of $23 could be close to the previous highs with respect to the candles. In terms of now analyzing the near's price action and interpreting in terms of the regression based valuation, what is the fair value for near, is it doing well? The polynomial regression function says that the fair value for near is coming at around $3.70, whereas the current price is slightly below that. If we apply one standard deviation residual to the fair value, you will identify that whenever the price is lower than this green line, historically speaking, that has been a decent entry point for near. Again, identified those points in the bear market as well, when the price was at around roughly speaking $1. Now we are essentially 2.5x from that level. We made a lot of videos during this phase related to near. You can check them out on the YouTube channel as well, made over a year ago or 12 months ago, related to more than 12 months ago, near related to near. If on the other hand there is a one standard deviation ceiling applied, a 68th percentile price action towards the bullish side for near comes at around $5.87, which is coincidentally close enough to the 0.23 fib level. So that is one ceiling estimate. If there isn't much of a euphoria in the market, that could provide a good price target. In terms of the two standard deviation or euphoria ceiling for near at this point is coming in at around $9.31. Again, if you get rid of the other lines to see it more clearly, you essentially see that there is only a 5% chance that the price goes above this orange line. That $9.31 also represent close to the 0.23 fib level, and the machine learning based model that we just saw for near, where the price forecast in a non-euphoria phase was capped at around $8.80. So that's where near is on this regression based valuation. In terms of the simple moving average, 20-week simple moving average based risk levels and color code applied to the price action, this model identified some of the risky levels for near. Right now the risk is coming in at around 23%. So the third best time to get into the trade for the model. And if the hypothesis is that in major tops the price goes eventually between the 60% or 0.6 to 100%, or 0.6 to 1 risk level, at this point, if the prices were to go to that risk level, the target for near could be between roughly speaking $10.90 and about $15. So that's the higher end of the estimate per the 20-week moving average based model. In terms of the dollar cost average model, which is similar to the polynomial regression analysis that we just conducted, instead of conducting at a weekly level, this is conducted at a daily level to identify the risk at any point in time. This model did a great job in both identifying the short term peak and the bottom. I'll just get rid of the intermediate risk levels to better share that story. So again, whenever the price is significantly below the regression based fair value, the color codes are either this dark so this dodger blue or the purple, either this blue color or this purple, which is less than 10% risk, identifying the bottom to the T first in December 2022, then again in October 2023. Now the risk levels per this model is at around exactly at around 20%. Also the other side of thing is whenever the price action has gone too far away from the regression based value, this again identifies some of the topping pattern. In March of 2024, when the price went to at a daily price level of about $8.88, back then that corresponded to risk of about 94%. Now the risks have gone down quite a bit. again the price estimates have also gone down because the shape of the regression function is now in a bearish shape, since the price action stopped making higher lows for near. Now they are making lower lows again essentially since February 2025. But if the hypothesis is that the prices eventually go to this between 70 to between 70 or 60, sorry, 60 to 100% risk, that phase could kick in between $8.24 and are at around at this point. With that kind of estimation, the 2 standard deviation ceiling comes at around the at around $7.61, and if you apply some 20% wiggle room to that, then the 2 standard deviation ceiling for near could be between $8.40 and about $9.15 per this model. We have a composite of all the models at the end. The time weighted average price says that near has been in an accumulation phase whenever the price is lower than this blue line, which is the time weighted average price, and based on that the deviation between the price and the time weighted average price, the risk levels are identified. Right now the time weighted average price comes at around $4.65 in per this model anytime the price is below the time weighted average price, and the underlying hypothesis being that near is a quality project and has a chance to survive and make new waves of adoption across multiple market cycle. Then accumulating below the time weighted average price is per this model is a good risk reward, and again did identify the accumulation zone. Again, this model does identify a range rather than an actual bottom, but again that's the purpose of this model. And per this model right now the risk for near again in terms of score is at around 0%. Again, this model rounds off risk to 0 whenever the price is below the time weighted average price. As an estimated bull run target for near, which takes into consideration all of the risk based models, an estimated weighted risk for near comes at around 14%. Again, 20% regression risk, 0% time weighted average price risk, 22% SMA risk. That risk reward, if the price were to go to 100% risk level, the price at that point per all of the models together put together could be at around $18. If you believe that near reaching 100% risk is again a highly unlikely event, and looking at a top which is 60 to 80% of that level, that gets you somewhere of a target for near between $10.90 and that is 60%, and then $14.40 for near. And coincidentally that $14 is the 0.618 from the previous all-time high. So again a chance that if near does not make a new all-time high for this cycle, that could be a top, whereas if the prices go to that euphoria, that this time around the top could be slightly higher than the previous all-time high at around $23. So those are the two longer term estimates for near. And with that I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.